we discuss cost volume profit analysis, right? Cost volume profit analysis. Then we were able to look at some formulas in cost volume profit analysis. And I said that the cost volume profit analysis is is mainly for decision making. The cost volume profit analysis, or the break-even point. What is break-even point? Break-even point is a point where the company did not make either profit or loss. And I still go further and say that the break-even point or break-even analysis or cost volume profit analysis adopt the techniques of marginal costing, right? Now, you can see from our formulas that we have in calculating in CVP of a single product, you can see that we started with sales minus variable cost. You have your contribution, or you say selling price minus your variable cost per unit. You have your contribution per unit, and we have so many formulas like that. In our last class, we were able to examine those formulas, and I said to you that you don't need to cram the formula. What you need to do is to understand the formula, right? Now, it's been three diets, right? It's very interesting to know that it's been 3 diets that I've not even take PM at all. And going back to PM is just like I'm just refreshing my brain, right? Because everything is just too simple. What did I do is because during the days of 8 years and thereabout, I try to understand the concept of cost accounting then, as well as what performance management. So please, if you understand this thing, you can see the worst case scenario in exam, and you will be able to answer the question correctly, right? And that is what we are doing at Next Gen Professional Associate. In today's class, we shall look at one of the Ican or ACCA past questions, right? I think this question, when I said this question and I decided to check last diet, I think last 2 diet thereabouts, I can tested something like this, similar question like this. Yes, you can see it is up to Roma figure what 10. I think ICANN is not up to 10 thereabouts, right? So in today's class, we shall look at the single product, right? Single product. Now, Biliki Nigeria Limited produces a single product. The company's income statement for the most recent year is as follows. Don't forget, when you see a question like this, you read the require, right? What they say you should do first. The first one, they say, compute the company's CMR and variable cost ratio. Don't forget that we have examined the formula for calculating contribution margin ratio, right? Contribution margin ratio and variable cost ratio, right? Class, what is the formula for calculating variable cost ratio? If you get it, just send me DM, right? If you get the answer, just send me DM your data for the month. Don't worry, I will take care of that data, right? So if you get this answer, so what is the formula for calculating variable cost ratio? Variable cost ratio.
Variable cost per unit all over sales.
Thank you. Per unit, you can use it, fine. Divided by sales. Sales what? Is it selling price per unit, or when you use variable cost per unit, are you dividing it by the sales per unit or sales? When you
Sales per
use,
unit.
okay, sales per unit. Okay, please, immediately after this class, just send me DM, right? So I'll send something
Ah,
to you. Right. Thank you. Thank you. So, and that is just how it is, right? Variable cost ratio. Don't forget that I mentioned this, that your variable cost changes with the what? With the sales volume. With the sales volume. With the sales volume. Is that also? Now, you can see the requirement to break even point. So, we will examine all these things one after the other. Let's quickly start from the Roma figure 1. Suggested solution. Quickly, suggested solution suggested solution, right? Suggested solution. Don't forget that at Next Gen Professional Associates, right? We don't have already made answer to all those questions. We have to do it in the class together. If it is wrong, If it is right, so we'll do it together in that class, right? Now, so number one, the first requirement says that so we need to determine the CMR. Class, what is the formula for calculating CMR? What is the formula for calculating CMR? Quickly, what is the formula for calculating CMR? Because the question says we should calculate what? CMR.
Contribution per unit all over selling price per unit.
Okay, you want to use contribution per unit divided by selling price per unit. Use it to
Selling price per
you,
unit.
you can use it. But in this question, class, in this question, your sales in value is given to you. Is that not so? And your contribution in
Yes,
value
sir.
is given to you. So you don't need to you don't need to use the selling price. Use the total, what is it called? Use the total contribution given to you divided by the total sales given to you. Since it is given as the sales of 1.2 million, the total contribution of 300,000. Had it been you are given selling price per unit and contribution per unit, you can use it. In fact, if we are not still given the selling price per unit and contribution per unit, you can still get your selling price per unit. Is that not so? Now, when you want to get your selling price per unit, just like the way we normally do, this is your total sales. This is the sales unit class. When you divide 1.2 divided by 220 units, you have your selling price per unit. Is that not so? Now, this is your contribution. Now, you can say this is your contribution, total contribution. You want to get contribution per unit per one. What do? 300,000 divided by what? 20 units. When you divide it, you have your what contribution per unit. But we don't want to go into all those things. Just using sales value is given and the total contribution is given, we can use it and move ahead. Class, am I communicating? Class, am I communicating?
Yes, sir.
Yes, sir.
Okay. So if that is established, we move on. So what is the formula is contribution divided by, see, don't forget this thing, no. Don't forget CMR. C stand for contribution. Class, M stand for what? Margin. Then margin means what? Ratio, right? Margin means what? Margin means ratio. Is that not so? So contribution divided by margin. Margin means sales times 100, class, times 100. We give you contribution margin ratio, right? So now quickly, contribution, you just give me figure so that we move ahead, right? So contribution, so I don't need to write the formula, right? Contribution, what is our contribution? Give me figure for the contribution, 300,000 divided by, what is the sales? The sales is 1.2 million, right? 1.2 million. So class, figure times 100, what do you have? Figure. Hello?
25%.
Okay, 25%. Okay, where is Fumi? Fumi, I need your figure. Where is Chris? Is Chris in this class?
Okay, 25%.
Okay, thank you. Please, you guys should be giving me figure. I need your figures, right? It's very important, right? So just to confirm if you are following. 25%, right? 25%.
Yes,
Now, if this is established, don't forget that the question has two ways. The question said that, oh, we should as well do what? Variable ratio. See, don't allow them to confuse you with English. Variable cost ratio, class. Don't ask yourself when you now see it, you now say, IB did not teach us variable cost ratio. What is variable cost ratio again? Don't forget, class, what is another name for CMR? If I don't want to use CMR, what is another name for CMR? Who can tell me? Another name for CMR. Data going.
PV ratio. PV ratio.
You say what?
PV ratio.
Profit.
PV
PV.
ratio.
Oh,
Wait,
Lord.
PV
wait,
ratio.
Prince. I'm coming. Prince first. Prince, make I choose my guy. Okay. PV ratio. If I don't want to call it PV ratio, is what? I can call you to which ratio? Prince.
Contribution to sales ratio.
They don't help you
Contribution to
share your
sales ratio.
data.
CS
They don't
ratio.
help you share your
CS
data.
ratio.
Thank you. The person, that other
CS
person.
ratio.
Yeah, no. Prince.
CSR ratio.
Okay.
CS ratio.
Prince and the other lady, please. you can TM immediately after this class, right? So you guys have something. So
Okay,
now,
sir.
if that is established, now this is variable cost ratio. Is that also? That is variable
Okay.
to sales ratio, because your variable cost changes with the level of sales. Is that also? Your variable cost changes. So when you see a variable cost ratio, it is usually variable cost to sales. They will not put it like that. Why do you have to do your variable cost ratio? Because it varies with the volumes of sales, right? So therefore, we can move on and say variable costs, variable cost ratio, variable cost ratio, right? Right? So equals to,
Okay.
let me bring this out.
Very
Variable costs, right?
well still.
Divided by sales class. So what is the variable cost given to us in this question? Quickly. Oh, we don't have the question. Sorry, I've not sent it. So, all right. Okay. Picture it. Please capture this part. Just capture this part, right? Just capture it, right? So the variable cost is 900. Is that not so? Okay. Thank you. So, have you captured that? Okay, good. So 900 divided
Zero
by,
point 0.75.
okay, good. 0.75, right? Zero
Yeah.
point seven five.
75.
See, all of you must pass PMO. Go and tell your village people. Tell them that you are now in next gen professional associate. Oh. Go and tell them
Not be
you
smart.
must pass PM. You must pass what? PM, right? Thank you for that figure. So now the next part of it is number 2. What is the next question? Let's quickly go and check our next question. Quickly, I'm coming. Next question. I'm coming. Next question. Okay. So the next question says that compute break-even point in units. I just need someone to give me the formula. What is the formula for calculating break-even point in units? I will not write it out. Give me formula. Break-even point
That's
in units.
CM over
Fixed
50.
cost divide
Fixed
contribution
cost
per
over
unit.
contribution per
Contribution
unit.
in unit.
Per unit.
Okay, I'm coming. One after the other. Okay. Fumi.
Ah,
Fumi, are you there? Okay. Uh, Leslie Bombs.
fixed cost all over contribution per unit.
Okay, good. Okay, fixed cost over contribution per unit, right? That is your
Yes.
break-even point in what? In units. Is that also?
In
So,
unit.
okay,
Yes.
thank you. So BEP in units. Chris, you will give me the BEP in value. Get ready. If you like, go and check your formula. So break-even is fixed cost. I don't need to write the formula out. You already have it. It's on the YouTube, right? Now, fixed cost divided by contribution per unit. Is that also? Now, we go back, right? Oh, fixed cost divided by contribution per unit. So what is our fixed cost, class? What is our fixed cost? 240, right?
240,000.
40,000.
240,000. Now, contribution per unit. This is total contribution. Is that not so? Is that not so?
Yes.
So if I want to get contribution per unit, what will I do? Contribution per unit. If I want to get contribution per unit,
You said
what
That's
should I do?
that
300,000 naira
three
divided
hundred divided by
by
20,000
units.
units.
Thank you. Good. 300 divided by what? 20,000 what?
20,000
20,000
units.
units. Thank you.
Units.
So now if that is established, right? Right? Fixed cost divided by what? Contribution what? Contribution per unit. So now before that, first of all, get your contribution per unit. Contribution per unit. Let's say contribution per unit. So let me call, I just need two, one guy and one lady to be giving me figure. Let me just call two so that the class will not look, okay, just two. Where is where is Precious? Precious, are you still with us?
Yes, sir. Good evening, sir.
Oh, good evening, good evening. Okay, one. Precious, you'll be giving me figures, right? One. Then where is this guy? Where is this guy? Okay, let me choose Chris. Chris, are you there?
Yes, I'm there, sir.
Okay. Then Fumi will just support. Fumi and Balogun Mohammed. So we'll be at the background, right? So they will just be on standby, right? So I just need Chris and Precious, right? You give me figure, you give me figure, right? You give me figures, right? So, and that's how we roll. Quickly. Now let's move on. Now, the contribution. So what is the value for contribution? Total contribution. Let's quickly, please, just capture this part. Capture it quickly. Total contribution is 300, right? 300,000 divided by the 20 units, right? We give you a what? Contribution per unit. Is that not so? So 300,000 divided by 20,000 units. Don't forget, we call figure, the way we call figure. So quickly, what do we have? What is the contribution per unit?
15.
15 naira per unit.
Chris, is that how we call figure here?
Sorry, 15 naira per unit.
15 naira per unit, right? Per unit. Thank you, Precious, for the correction. So now it is 15 naira per unit. Is that not so? So now
Yeah.
what is the fixed cost? Give me the fixed cost figure. What is the fixed cost? Do you
Two,
have it? What is the fixed cost?
240.
240,000.
240,000. Okay, thank you. Divided by the contribution per unit. Is that not so? Divided by what? Contribution per unit, which is what? 15 naira per unit. Now, let me give you one cheat here. You can see that naira can divide, naira cancel naira. When naira cancel naira, you have units. Class. When naira cancel naira, you have what? You have units, right? When naira cancel naira, you have what? You have units, right? Now, 15 units. So what do we have? What is the unit?
16,000 units.
Thank you. 16,000 units. That is a very good one. So now, if we have calculated the break-even point in units, so the next is to determine the break-even point in what? In value. So we need to determine the break-even point in what? In value. So BEP, because the question requires that, right? BEP in value, right? BEP in value. So what is the formula? So now I can pick anybody now. So what is the formula for calculating the BEP in value? Joy, BEP in value. BEP in value. Chris, BEP in value. Do you know it? What is the formula?
Fixed cost divided by contribution margin.
Thank you. Contribution margin ratio, right?
Yes.
Contribution margin ratio. Fixed cost divided by what? Contribution margin ratio. Please go and check the previous lecture on introduction to cost volume profit analysis immediately after this class, right? So that you get your notes from there, right? Although I will still send this note to those who are actually make payments, right? Now, it is what? The fixed cost divided by CMR. So let me write it out. Fixed cost divided by CMR, right? Now, don't forget that what is the formula? So we already know our CMR because we've gotten our CMR already at the first instance, which is 25. Is that not so? Now, don't forget that you can give me another formula. I said if you don't want to use fixed cost over CMR, you can also use what? Class. What is the other formula? What is the other formula? Okay, Winifred. What is the other formula? Winifred, quickly.
He said we
What is the
can
other?
use fixed cost divide by contribution times selling price.
Thank you. Fixed cost divided by contribution per
Per
unit
unit
times
times
what?
selling price.
See, this if you want to be very fast in PM, right? You already have 16,000 units. Is that not so? You already have 16,000 units. Just multiply by selling price per unit. Bam. You have your value. Or you say fixed cost divided by CMR, you get your value. You move on. You can see you already have unit. Multiply it by selling price per unit and move on. Or you see fixed cost divided by what? CMR. So now quickly, now we can say equals to fixed cost of 240, right? Divided by the CMR. We already calculate the CMR already. So if not, we would have said, oh, let's calculate CMR, right? And the CMR is what? 25%, which is what? 0.25. So what do we have? What is the value? Quickly. Class, give me figure. What is the value? Quickly. Where is
960,000.
960,000? Thank you. 960,000 naira, right? 960,000 naira. You can see if you multiply it by the selling price, if you multiply 16,000 units times selling price. Now let's check it out. Let's check it out. So what will be the selling price? Class, what will be the selling price? If you want to get the selling price, this is the total. Divided by the units. You have your selling price per unit. So what is the selling price, class? What is the selling price? What is the selling price when you divide it? What is your
60
selling price?
naira.
50 naira. Good.
60
Now,
naira.
okay,
60.
now,
60.
60 naira. Now, multiply 60 naira times 16,000 units. You have 960. Is that not so? And that is how
Yeah.
it works. Do you get? So that is another way. So quickly, number 3. Let's check number 3. So from our requirements, right? Number 3. Oh, sun is not going. Number 3. Okay. Oh. So next. So what is the next? What is the next? This requirement. Okay. Number 3. Now, class, assume that sales increase by 400 naira next year if cost behavior patterns remain unchanged. That is, if the cost remain unchanged. By how much will the company's profit increases? Class, I made mention of something in our previous class. There are some of you actually pay attention to my explanation. I know. Now, in our last class, I made mention of something that when your sales volume increases, your variable cost will also increases because when you want to make a sales, you incur a variable cost, which varies in line with the sales, right? While your fixed cost, your total fixed cost remain the same, right? So this is to tell you that you don't need anybody to tell you this, that, oh, they say assume that sales increases by 400,000 next year. Oh, if cost behavior patterns remain unchanged, right? By how much will the company total? Don't allow that if cost behavior pattern remain unchanged. So don't allow that to confuse you, right? The cost behavior pattern here could be that the fixed cost remain the same because they did not actually state it. Is it the variable cost or is it the fixed cost that remain what? Unchanged, right? But you should understand that assume that when your sales, right, when your sales increases, right, it will affect your what? Your variable cost, class. So which means that as you are increasing if the sales increase by what? 400. So we need to increase the sales. You know, the sales was 1.2 million, class. The sales was what? 1.2 million. So we are adding what? We are adding 1,000, we are adding 400,000 to the sales. We are adding what? 400,000 as the increase. Is that also? So 1.2 plus 400 will give us what? 1.6. So the sales has increased by 1.6. Now the question now, when the sales increase by 1.6, now by how many percent will your variable cost increases? So if the sales has increased to 1.6, definitely your variable cost of 900,000 we as well what? We as well increases by how many percent? We don't know. Is that not so? We as well what? Increases. Now, class, the question you will ask yourself, right? The question you will ask yourself, don't stress yourself too much. They say what? What is the question? The question says that by how much profit will the company's what profit increase, right? We want to know by how much what will the company profit what increases. First, increase the sales. Now, increase in sales by 400,000. So therefore 1.2 plus the 400,000 right, equals to 1.6 million. Now, the sales has increased by 400, right? Now, what you need to do is that we need the variable cost to also we want that sales increase to reflect in our what? In our variable cost. Class, the next thing you need to think of is that from your formula, class, listen, from your formula of cost volume profit analysis, where can you see variable costs? Where can you see which formula has variable cost? Who can tell me? Which formula can you see that have variable cost? Which formula, class? Which formula include variable cost? That when you want to calculate that particular item, you will include variable cost there. Who can tell me?
Variable cost ratio.
Variable cost ratio. Variable cost ratio.
Contribution.
Contribution. Total
Contribution.
contribution.
Contribution margin ratio. Now, I don't want us to use contribution, because when you say contribution, your contribution is your sales minus your variable cost. But what we want to get is that variable cost. So you need to make something the subject of the formula for you to get. Now, someone mentioned variable cost ratio. We will use it, and we will still use CMR. Then we will now look at it. What will be the value of our what? Our variable cost. Don't forget, since your sales has increased by 400, your variable cost will not remain the same, will also increase. Is that not so? Now, let's use this. Now, we can have CMR. Now, don't forget that we already calculate CMR as this. Now, CMR is equals to contribution, total contribution divided by sales. Total contribution divided by what? Divided by sales, right? Total contribution divided by what? Divided by sales. Now, in this case, right, we can as well have CMR equals to, what is your contribution? Your contribution is your sales minus, you want to define your sales, your contribution. Your sale is what? Minus what? Variable cost. Prince actually mentioned that we should use variable cost ratio. We'll use it, right? Now, divided by sales. Now, in this case now, you already variable cost. Sorry about this. Variable cost. Now, you've already what? Increased your sales by this. So what will be the increment as a result of what? As a result of this increase in what? Increase in the sales. Now, what you need to do now is your CMR. What is your CMR here? Your CMR here is what? 25%. Excuse me. Your CMR is what? 25%, class. Your CMR is what? 25%. So we can have 0.25 equals to the sales has increased to 1.6, right? Minus your variable cost. Now, what will be your variable cost when the sales increases by 1.6? Don't forget that the variable costs already have what is it called? 900,000. Is that not so? There are two ways you can do it. Now, you can make S the subject of the formula. Is that not so? You can say X. Make your variable cost to be X divided by your sales is what? 1.6. 1.6. Is that not so? Don't forget that it is 1.6 minus x divided by 1.6. Class, the next thing you need to do is that, you need to cross multiply. Class, don't forget that this is 1.6 minus x. You use x as the subject of the formula. Is that not so? Then this is your variable cost. This is your sales. Is that not so? This is your what? This is your sales. Class, am I communicating? This is your sales. Now, let me make it easy. Let me make it easy for you. I'm coming, because this thing, you must understand it, right? Don't cram, right? You must do what? You must understand it. And it's very simple, right? Very, very simple. Just keep your finger crossed and watch. Okay. So let me put it this way so that you will know what I'm explaining. Let me remove this. Yeah, let me bring this one down. Yes, let me do it like this. Class, let me go to mathematics. Let S represent what? Variable cost. Class, let S what? Represent what? Variable what? Variable cost. What do? You cross multiply. So when you cross multiply, 0.25 will multiply 1.6, right? So we can have 0.25 times 1.6 equals to 1.6 minus x. Class, give me figure. 0.5 times this. Give me figure quickly.
400,000.
Thank you. 400,000 equals to this 1.6 minus x. Class, if you do mathematics for school, right? If you do mathematics for school, what do we do now? Right? This one can be
Like
x equals to, you collect like 10, you say x is equals to 1.6 this minus 400. What is your x? What is your x? Class,
1.2 million naira.
one what?
1.2 million naira. 1,200,000
1.2.
naira.
Thank you. Now you can see, class, you can see that your variable cost has increased to 1.2 million. Class, what is your variable cost before? Your variable cost is 900,000 because the sales is 1.2 million. Now, when the sales increases to you need to know the difference between by and to. They say it increased by, you increase it by that amount. If they say it increased to, you don't need to increase it again. It has already increased. Let me repeat. When they say increase by, you need to increase that your figure by that amount. But when they say increase to or decrease to, that is the decrease. You don't need to add or you don't need to subtract. Class, your sales varies with your variable cost is in line. There is a relationship between your sales and your what? And your variable cost. Now, you can see some will say, Ivy, where is the variable cost now? They have variable cost of 900 before. Where is it? We can't see it here. Class, what did you use to get your CMR? What did you use? You use contribution divided by what? Sales. When you want to get your contribution, what did you use to get your contribution? You use sales minus your what? Minus your variable cost, which means that in the calculation of your contribution margin ratio, your variable cost is inclusive. So you don't need it, right? Or you use the variable cost ratio to get your what? to get your variable cost. Class. So now, am I communicating? Variable costs. Class. Are we still together?
Yes, sir.
Okay,
Yes,
okay,
sir.
okay. Okay, that's fine. Okay. So now, if this is established, right, that the question says how much profit increase, right? We want to know how much profit what will increase. You already know your sales class has increased by this. You already know your variable cost class. Then let's get it, okay? Quickly. So profit statement, right? Don't worry, before the end of February, when I'm solving in class, you'll be seeing me like this on the board, right? Even at night, you'll be seeing it, right? There's a provision for that. So that all this typing in Word, we save our time. There is a lot of works on the ground, right? We are coming there. By the end of February, hopefully. Now, you can see that the question says that by how much will the company profit increase, right? So now let's go. So we need the profit statement, right? The profit is what? The profit statement. Now, our sales, let me just put it like this. Our sales is 1.6 million. Your variable cost,
1.2.
1.2. Thank you. 1.2. Okay. Then what is the difference? We give you a contribution, right? So you can put less and move on. So give me figure. What is your contribution?
400,000.
400,000 naira. Okay, thank you. Now, you can see that your contribution has also increases as a result of that, right? Now, your fixed cost, they say profit, oh, don't forget your profit, your fixed cost. This is the fixed cost that they say it will remain unchanged. This is the fixed cost pattern that the question says it will remain unchanged. Class, your fixed cost still remain as 240, otherwise, unless if it is stated otherwise in the question, right? Unless if it is stated what? Otherwise. So what is the profit, class? What will be the profit? What will be the profit? What is the difference? Less
160,000 naira.
150,
150,000 naira.
160, right?
Yes.
160. Now,
160.
160. Now, this is what your profit. The question says by how much increase will it be, right? Now, what is the old profit? That is what we want to compare. Now, what is the old profit? We need to check. What is the old profit?
That's
Now,
60,000.
60. And the question says that, look at the question, by how much will the company profit increase? So we need to
Like,
look at, we will not say old profit minus new profit. When you say old profit minus new profit, we give you your what? Your profit increase, class. We give you your what? Your profit what? Your profit increase, class. And that is how it is. Now, we move like this, right? So we can simply put it as new profits uh profits increase is equals to new profit minus old profits, right? So it is 60,000 minus 160. So the increase is what? Is 100. Professional colleagues. And we have solved that question. Right? We have done what? We've solved that question. If you have a question for me before we move ahead, unmute your mic. Apart from those who are just joining us, I know the person that is just joining us. I know the person. Don't ask me question, please. Right? If you are just joining us now, don't ask me question. But if you've been here since, you can ask question. They play. Better put down your hands. Next person, Joe. I beg, the third person. Oh, let's move on since there is no question. Let's move on, Joe. So now, if this is established, question 3, requirement 3, right? The number 3 now. Number 4 says that if profit of 120,000 is desired, determine the sales. See, you can see the way I solve that question, class. This is the way we'll be solving most of CVP questions. Class, you just have to think, oh, they said sales will increase. Oh, what will increase when sales increase? Oh, is variable cost. Now you will say ask yourself that, oh, if variable cost increases, so definitely I need to get the increase in the variable cost. Okay, what is the formula? Which of these formula that I can see variable cost so that I can make the sales the subject of the formula? You think, oh, it's CMR. Have I calculated CMR? You say, no, oh, I've not calculated CMR. You quickly calculate your CMR. Oh, you calculate your CMR, you move on. And you say, oh, CMR is 50% for instance. And you say, oh, CMR is, C is contribution, M is margin, class. M is margin. Make it the subject of the formula. You move on. Right? Your contribution is your total. Is your what? Your total sales minus your what? Your variable cost. You make S the subject of the what? Of the formula. You do what? You move on. Class. And that is how it is. Very simple. Now, if profit of 120,000 is desired, if profit of what? 120,000 is desired, determine the sales in units and what? In naira. Class, what is that? What is the formula? Which formula are we using? Quickly. So, omit your mic. If profit, we want to make a profit of 120, determine the sales in units and naira value. Class, which formula? Should I call name?
Fixed cost plus target profit all over contribution.
All over what? So that is from our formula. We have from the formula, we have sales in units to achieve profit, to achieve a target profit before tax. Is there. Sales in units, BEP in units to achieve a target profit is there. So what is the formula? It is calculated as your fixed cost plus your target profit. You can see they want to make a profit. This profit is before tax. Divided by your contribution per unit. Because you are looking for unit. Don't forget, when you are going to look for something in units, you divide it by contribution per unit. Class. Now, how many percent? Oh, 10 minutes. Please, if it is immediately, if it is 10 minutes to end this call, please let me know so that we can create new link. Oh, 61%. Wow. Okay. So we can create new link and we'll just move on with the little we can. Then tomorrow on Friday we continue. Now, number four. So number four. Who is this one? Number 4, right? Sales in unit to achieve a target profit. is equals to, I'm not putting out the formula of fixed cost plus the target profit. What is the target profit there? What is the target profit? What is the target profit? 120,000. 120,000. 120,000. Quickly. 120,000 naira. 120,000. Right? Divided by contribution per unit. We have already calculated contribution per unit. We've already calculated our contribution per unit. Let's go back. Let's check. Where is it? Where is it? Where is it? Oh, wow. So where is our contribution? You can see this is our contribution per unit, right? Is what?
Yes,
15 naira,
15
right?
naira.
15 naira. Thank you. Contribution per unit is what? Is 15 naira. So we quickly move. This is another question now. Anyway. Okay, 15 naira, right? 15 naira per unit. What do we have? Quickly. What is the unit? What is the unit? Quickly.
24 units.
20. Who said 25,000 naira? Anyway, 24,000 naira care. Who is this one?
4,000 units.
24,000. Who carry talo megun wa? Who carry person wey no dey hear word come here? Abeg now. So we have 24,000 units. Now don't forget that if you want to, the question says you should do value as well. Don't forget that you need to be very smart enough. See, don't forget that I said there are two formulas, right? There are two formulas. See, you just need to be very smart, right? Now, this is in value, right? In value. So I can decide not to say, oh, fixed cost. When you want to get in value, you say fixed cost plus your target profit divided by the CMR. I may decide not to go by that route, which I will do now, right? I can decide that, oh, this is unit, multiply it by selling price per unit. The real selling price per unit, so they did not tell you that you should use the increase. So please pay attention to question. The question did not say, the question did not make reference to this increase that you just got here, right? It did not make reference to, so since the question did not make reference to these sales here, now, right, you make use of your normal data unless stated otherwise, class. So now if this is 12,000 units, multiply it by the selling price, the real selling price, right? So that is what I will do. Times, when you want to calculate your own, you can use the other format, times selling price per unit. Now, let's go back to the data because we didn't calculate selling price per unit then. So the selling price per unit is 1.2 divided by 20 unit. Class, don't go and use the one that increase. The question 4 did not tell you that use the number 3 data. Use this. They just give you simple question to solve without reference. Don't set questions for yourself and go and use the one of increase. Okay. Now, it is 1.2 what? 1.2 million divided by what? 20,000 units. So when you divide it, you have your what? You have your selling price. You have your selling price.
60 naira.
Thank you so much. God bless you. Divided by 20 what? 20,000 what? Units. Right?
Yes.
So when you multiply,
You have
what
60
do you have?
naira.
What do you have? No,
60 naira.
multiply it by 24,000 units. I put multiplication here. I no get time. Sharp.
1,440,000.
Thank you.
440,000.
440,000. Thank you. That was good. So I think what is this? 24%. Wow. 8%. It's right. Oh, 5. Okay. Good. I think my apologies. Like I said, I'm working on so many things, right? That will allow us to use more than more than the numbers of hours. Like now we are supposed to finish this class, right? And we will not continue this class tonight. We will have to stop here, right? So because let me remove it on recording first.